Donna and I are back this week to talk about part 2 of our conversation in planning for retirement when it comes to the kids and the grandkids right here on Wisdom and Wealth.
This is Donna and this is Jim, each with a family that had to begin again. As they've brought their worlds together, they've learned a lot about blending families and finances along the way. Now, they're here to help you take on this new chapter with clarity and confidence. This is Wisdom and Wealth, financial clarity for families in transition.
Hey everybody, welcome into the show. Thanks for hanging out with Donna, Kendrick, and myself as we talk investing, finance, and retirement. Donna is a certified financial planner and a certified divorce financial analyst at Sefton Financial. And I lob the questions to her, and she helps us think through some of these things. So we're going to continue on with part 2 of our conversation this week about, just financial planning, retirement planning as it relates to when you've got kids or grandkids or, maybe even extended family or, families in transition, which is what a lot of Donna's clients are going through. So we'll get into that conversation and do part 2. How are you this week, Donna?
We're doing very well. Thank you, Mark.
Yeah.
I'm interested to get back into this one because it is just so relevant for so many of us right now. And it's just nice to have a conversation openly about it instead of being like, ooh, I don't want to talk about that. Stick my head in the ground. So, good stuff.
I mean, how many families do that too, right? They're like, hey, I need to talk to you. I don't want to do that.
Yeah. I was actually talking to one of the clients today. She's like, and then my mom changed the subject. So, we should be talking about it. I'm like, that's a great clue. Change the subject and we should have been there. We should have spent some more time.
Yeah, exactly. Well, you'll have to forward her this episode and say, here, get your mom to watch this with you. Yeah. All right. Well, let's pick it up. We've got 5 more we're going to go through. So if you did not catch the prior episode, you don't have to catch it in order to make this one to make sense, but it's not a bad idea because there was some good stuff on that one. So make sure you check us out on Apple or Spotify or YouTube. But let's go ahead and get into the next ones here. So we've got parents, Donna, who purchase life insurance policies that can kind of provide that financial stability or even contribute towards an inheritance. So basically, effectively using an insurance policy or an insurance product while you still can is not a bad thing to think about.
Exactly. And there's so many different types of products out there. So we always say, reach out to a certified financial planner, to a financial advisor, a financial professional. But we can go through some of the big top 3. So we can go through like term insurance. So that's something that you actually get underwritten with. It's underwritten according to where your health is, how much coverage you want, and the length of time. It can be 10 years, 20 years, 30 years. You lock into a specific premium, and then that premium's the same year after year. Let's say you get a 20-year policy and in year 10, you're like, I won the lotto. Don't need it. You can then go ahead and cancel the policy. So that's term. And many of us use that when we're younger, when we can really be underwritten well to protect things like saving for the kids' college, for our mortgages, for loss of income. That's what really protected Greg and I after he passed many years ago. The second one could be like a whole life or a permanent policy. And that almost has like a savings feature as well as, think of it like a layer cake, a piece of insurance on top of it. Right. So later in life, you can use what you've saved and what's grown. Many of them have many different features. So again, find a financial professional to talk it through. But then should something else happen to you, you could probably seek from the life insurance should someone pass instead of that savings feature. And the other one is annuities. And I do remember annuities feeling like such a dirty word for many years out there. Yeah. And they really can be such a useful tool.
Insurance products, period, Donna, they're not your daddy's Oldsmobile, if anybody remembers those commercials from back in the day. Right?
I do.
Right? Me too. Because to your point, they have changed, like insurance products, period, whether it's regular, like whole or term, like you just talked about, or annuities. All of that has undergone massive overhauls in the last probably decade or so. And there's a lot of differences out there. So anyway, please continue.
Yeah, no, lots of differences, lots of regulations, right? And so that's where we say take that dirty word out of it, because we as advisors have to jump through hoops to be able to justify why this is a really good product for our clients to consider. And if you have a financial advisor who isn't telling you all the steps and the why it's the perfect end quote, product for you, then you should worry, right? You should be asking some more questions. Go get a second opinion. But annuities can be ways to change for example, for many of my widows, we take life insurance, we put them in an annuity to make it feel like retirement money. Because for many of us, when our spouse passed, we lost years of ability to save for retirement at their income, right?
True.
So that's where it can work very well. And we can also situate like retirement funds, like IRAs within annuities, and have things like death benefits or salary caps or downside protection within. So many people think, why put an IRA within an annuity, right? Well, you might want to consider it because you can capture some upsides, and that is protection from the marketplace.
Gotcha. Okay.
That helps preserve legacy too. So
it's got that kind of wrapper ability, right? You can put a lot of things inside there.
You sure can. You sure
can.
can.
Interesting. Yeah, and you were talking about, look, they definitely have gone through a period where they got oversold, right? Oh, yeah. And for some professionals out there, we'll use that term, if it's the only product that they have, then that's the only thing that they're pushing. So I get the oversell, but depending on your situation, it may be the only tool that's beneficial that does what you need it to do. But you don't want to just wholesale walk in to see someone and that's the first thing out of the gate they're talking to you about, right? You got to get to know them. You got to go through that process, Donna, that process that you go through with all your potential clients. And then you start kind of saying, okay, here's the options that may work. Am I on there?
You are. And there's a big regulation out there called Regulation Best Interest, which we as financial advisors have to make sure we justify according to how the product works, the cost of the product, the tools within the product, right? And so we want to make sure that we're having those conversations with each of our clients. What else could work too? What are the pros and the cons? So make sure your professional is doing that, because you're right. If a professional can only offer one family of products, that might be the perfect product for one sliver, one section of your financial plan. How about the rest? How does it work with Social Security? How does it work with income? How's it going to get taxed? We want answers to all of those questions.
Yeah.
So just educate yourselves without or have trusted advisors to help you understand them.
Yeah, that's a great point. A great way of breaking that down. All right, we went a little long on that one, but we'll keep moving. So we're on number 7. That's all right. No, we're fine. We're good. We're trying to educate as much as we can. Share some hopefully good nuggets of information. So number 7 of 10 here. Maybe you've got, and I know, Donna, this has been kind of important to you as well, is maybe you've got a desire to cultivate, financial literacy or whatever in your family members, right? So maybe you're a grandparent and you're thinking, hey, we don't do a great job of teaching people about how to prepare for their future. And right now we feel like the younger generation is going to be paying for a lot of problems out there in the world today. Or let's just go with the $35 trillion in debt. Somebody's got to pay that bill, right? Mm-hmm. So maybe, you're the thing you want to work on is helping your family be a lot better prepared when they get to your age than what you were.
Mm-hmm. And it's a big thing that we talk about often, right? Asking our clients that when their kids graduate college, can we actually sit with them? Can we review their first job offer? Can we make sure they're taking advantage of the benefits that are being offered to them as their employer? And that gives us the opportunity to then start that education, to start that conversation, to say, okay, what's the difference between tax deferred and a Roth? And why do you want to have that, right? How do we have life insurance? How do we protect our parents if they took a loan for us for our education and we don't have life insurance and something happens to us, right? These are the conversations we need to start having with our younger generation. So by having our clients introduce us to their kids, it just gives us that opportunity not to just make their head spin the first time we meet them, right, but to know that we're a safe person with some answers. Like, don't make any decision without reaching out. That's why we're here. And I think a lot of it too, we call it the trickle down effect, right? It starts with the grandparents, then moves to the parents, and then it moves to the kids, right? And I think some of it, we call it like the learning by storytelling, right? Like, what did I do wrong, not knowing it was wrong in my 20s, that impacted my ability to retire, right? Or my ability to have cash on hand when my late husband died. Like, what was that oops at that time? And when I can guarantee telling my daughter that, yes, we used all of our cash savings to put a deposit on a second house because we still own the first one. We hadn't sold it yet. And then when Daddy died, I had no cash, right? Everything was going on credit cards real quick. She always has a cash reserve now, and she's my blue sky floater, right? But because I've actually shared these stories with her, she's learning. That's a big part of it.
Definitely is, and I was just talking with a high school friend the other day who's a grandmother and was talking about the fact that her daughter is, a single mom like she was when she was raising the daughter. And she's like, and all the mistakes that I made with her, I see her making them now. And I'm like, hey, let me give you some advice because I've already walked that path. And she's like, it's interesting. I wonder if that's why we see so many grandmothers who wind up raising their grandchildren, raising them completely differently than they raised their own kids because they're wiser now and they've seen more things. And I thought that was really interesting. She shared that with me. And I thought, I know exactly where I'm going to bring that up on the podcast here coming up this week. And it's going to be on Donna's podcast.
I love it. And that's why we put the word wisdom in our podcast. It's because of these life experiences. It's because of experiences, education, and empathy that we can do this podcast and that we can serve our clients well. That's it. It's that experience too. Not just the books, not just knowing the rules.
Yeah, not just the numbers.
Apply to life.
Yeah, it's not just the X's and O's are important, but it's also all the other little pieces that go in there. Well, this next one's right up your alley as well. So, how do you handle finances in blended families where there may be different expectations? Let's say you're getting married later in life, you're getting a second marriage or third marriage or whatever in your 50s, and how you've got retirement money that you plan to send to your kids, and the new person's got retirement money that they wanted to send to their kids. So, how do you now replan for all that and getting it all together, right?
Yeah, and that's a hard one. And that is why my Jim is on this podcast with us often, right? To give us and to share with our listeners, like behind the scenes, like we are human as well as me being a financial advisor. And he and I come from two very different financial education levels, right? Both came from Northeast Philly. Like we both had that start of blue collar. But then what are we going to do with our decisions with finances now? My big keys for my blended families, one, communication, right? And then know what's appropriate to share with the kids and what's not, right? Some of these decisions can be behind the scenes. They don't need to know all of it, but they do need to know what we are willing and not willing to do. And sometimes the why behind it. The answer for our lovely generation coming up of because I said so doesn't work very well, right? So really,
it sure worked on us though, didn't it?
You didn't ask. You didn't ask any questions.
You didn't ask any questions because I said so. Okay.
It was the word of the Lord, and that was the end.
That's right. Or the look.
Yeah. And we call the word of the Lord what my dad said. Like it wasn't really God. It was what he said.
Yeah. Okay.
That was a big part of it. And two, I know I'm a financial advisor, but Jim and I used our lawyers very well to make sure that we were being fair, we were being equitable, that we weren't missing the bigger picture, and that everything is written down, right? Because if God forbid something happens to the two of us, we wanted to be very clear with the kids, right? And that is so important. And then the second part is like, because we're both quote unquote starting again, right? And there's a his, a hers, a mine, a yours, and an ours, right? We need to understand all of the emotions behind the money.
Yeah.
And we can't make decisions with that until we respect one another's viewpoints and emotions to it. Conversation for change.
Stuff. Yeah, no, that's great stuff. I mean, and it's really important. And for those of you who are maybe just catching this podcast or catching a short or something like that on YouTube, and you haven't checked out the intro to the video show, they're like a modern day Brady Bunch. They got 3 and 3. The only thing they're missing is Alice. So other than that, so it's really, I mean, you can walk the walk and talk the talk, not only from the X's and O's, but from the life experience as well that we were just kind of pointing out. So good stuff there indeed. Yep. Hey, Donna, what about special needs? What about families who are dealing with, how to do financial planning or setting some things up when they've got a family member that maybe always will need some help?
Yep. With that one, 100% get professional guidance, because depending on your state, just depending on federal regulations, there's so many, laws or provisions that you could actually lose. Yeah. Thank you. That's the word. I'm glad you're on this podcast.
That's why I'm here.
But then you could actually limit someone's ability to seek services because of assets in their name. So it's a very specialized walk for those of us who might have financial stability to be able to provide care moving forward, right? There's ways that you can do that very well that gives you financial certainty and your heart and your mind that they're going to be taken care of. But I would say, if I would have, honestly, someone with a special needs child that comes to my practice, I would refer them out because I'm not an expert in that. So make sure that you're not looking for someone who's a generalist. You look for a specialist on this one. Yep.
Yeah, and that's certainly fair to find the right person for that. And obviously, you could be talking about an attorney situation as well for setting up a trust, maybe where you're dealing with, someone who's going to be the overseer of the funds in case something happens to you. I mean, there's just a lot of little moving parts in there. So, good stuff. And yeah, I mean, there's nothing wrong with vetting out the right kind of financial team to help you, if you do have a special needs family member. So good stuff. Last one then, Donna, we'll wrap it up here with parents lending money to their kids for significant expenses, like a down payment on a house or even starting a business. Again, it kind of maybe circles back to getting the kids off the payroll, but this is, I think, on a larger scale, right? So, little Bobby, we're going to bring him back from before. He's grown Bobby, and he's like, yo, Dad, can I get 30 grand to start this business? And you may want to help him. You may want to help him get up on his feet like that, but you've got to look at what that does to you and your situation, because again, like you said earlier, in the first half of the show, you can't finance retirement.
Yeah. And when the situation comes up, it pulls on your heartstrings, doesn't
it?
Right? And so let's just talk in general. Someone who pretty much thinks they're going to be okay. They can manage their same lifestyle as parents into retirement. But it's borderline, right? And then you want to go help Bobby, right? And you know that, hey, this might be the favorite kid. That's my long-term care. I should help him get a house, right? I might be in that house.
What's in it for me too? I got to make sure he still loves me later.
How do we make sure he does, right?
Right.
My wisdom that I share to many of my clients is, first thing, make sure that if you give a gift of the money, even if you say, we're going to write it down, we're even going to have it professionally written up by a lawyer, it's going to be a loan, right? Okay. Be prepared for it not to come back. And if you don't get that money back, will you be able to successfully retire? Does that mean you have to spend 2 more years working that you desperately don't want to do? And if the answer to that is no, I can't retire, or I need to keep working, then really hesitate to do that.
And if it doesn't come back, Donna, can you deal with the strain it might put on your relationship because you're a little ticked off about it,
Yeah, 100%. And I mean, let's even say kids like to be treated equally amongst the family, right? So if you do it
until money's involved, and then it's like, I was just telling that story about my brother and I and our mom. We were having lunch, and I was like, "Are you buying lunch for the change?" Because I always get it. And he's like, "Oh, I forgot my wallet." And I'm like, well, "Of course you did."
I know.
Right? So, but it can it's all fun and games and something like that. But if you're talking about a big amount of money, it could cause strain on your relationship that you may not want.
Oh, it definitely does. And in our own family situation, right? Like each of my boys got a used car, right? When they turned 18. That was my gift to them. Some of them commuted to college, so they needed the car. And my daughter did not, right? My daughter got, we will just put quotes around, elite education from high school through college. Okay. So of course she graduated. She's like, hey, where's my car? Now remember, she has no license, but she's like, where's my car? I'm like, you don't get one. Like your money gets spent on education.
Yeah. It's in that diploma in your hand.
Yeah. They're 22, my friend. Right. But that's that thing of apples to apples, oranges to oranges. And sometimes we're just not comparing the same. So that was a great lesson that I'm glad my kids saved me with that. And then my bigger kids were like, yeah, and we went to state school. You went to this other education, and you have loans, but they ain't big, right?
Right. Okay. So they were chiming in too. Yeah. All right.
Yeah. So if they're going to have this conversation at 19, 22, and 23, where's their conversation going to be at 40 if I start helping people with houses and things like that? So they just squashed that idea, right? So for our question number 10, it's not happening in the Kendrick house. It's not.
Gotcha.
But those are the conversations.
Yeah. And if you don't get it structured out, you could be looking at not only the financial ramifications, to your point of just, hey, I loaned little Bobby this money for college or for a business, and now, honey, we can't retire. That might not go so well on that front. Then little Bobby doesn't pay it back, and then you've got the stress on that front. So again, getting a professional, running the math, doing the numbers, making sure things are sound as a pound before you do it is just a wise decision all the way around, if you ask me.
Yeah. And it is on top of it to make sure you're doing it in a really wise way, right? There's annual gifting limits, right? There's lifetime gifting limits. There's money that you could actually be taxed on as the parent that the kid isn't, right? So make sure what money you're saving, what money you're gifting, what money you're giving, what money you're loaning is the quote unquote quality of money that we should be shaving. So that's another reason to get professional advice too, outside of the emotions.
Outside the emotions. All right, good stuff. So thanks for hanging out with us here on the podcast as we talk about a lot of different things. But obviously, Donna's, mantra is financial clarity for families in transition, whatever that transition might be. But if you've got questions, you need help, as always, on something you hear on our podcast or any others, always see how it relates to your unique situation before you take any action. And you can sit down with qualified professionals all across the country, but certainly, Donna's here to help as well. And she helps people in more than just her Philadelphia backyard. So if you need some help, reach out to her. She is a certified financial planner and a certified divorce financial analyst, and you can find her online at seftonfinancial.com. That's seftonfinancial.com. To make it easy, just check the show notes of the description of the podcast on YouTube or whatever platform you're using, and you'll find little links and information in there as well. So that's a great way to do it. Donna, thanks for hanging out. Thanks for breaking it down as always. Good stuff. I appreciate you.
Thanks so much, Mark. Have a good one.
We'll see you next time right here on Wisdom and Wealth with Donna Kendrick.
Registered representative offering securities through Cetera Financial Specialists LLC, member FINRA SIPC. Advisory services are offered through Cetera Investment Advisors LLC. Cetera is under separate ownership from any other named entity. Sefton Financial LLC and Cetera are not affiliated. Sefton Financial is located at 8200 Flowertown Avenue, Suite 1B in Windmore, Pennsylvania, 19038.